What's happening, weekend Rollbit autists? How are you boys? Actually, a quick aside before we even begin the charting here. This is a message for you reply guys on X. When you guys are trashing my charts or running your mouth on there, just know that this is who you're talking to. Burn that image into your head right there. That's who you're going to get a response from, okay? You jackasses. All right, let's get to business. But yeah, I'm always available. Reply guy me online. I'll be waiting. All right, so here's base spread. I remember going on Spaces when this was 20 mil market cap, and that guy Crash was running them pretty much every day. Big respect to him. I mean, he's a young guy that put in 15K and ran this up to, I don't know, like 15 mil or something stupid. But I have huge respect for guys that take risks like that and go all or nothing, you know? It's a very reptilian brain move, and I got to get behind that. That's absolute degeneracy. At the same time, he's down 70%, and that's painful, man. And especially if it's your first cycle, from what I understand it is. So I hope for his sake and everyone that follows him that's invested in this, that this is just, you know, a mid-cycle correction backtesting this level right here, which it could easily be. So let's break down the chart. We're on the daily right now, but I'll go into the 12-hour. This will give us a little bit more finer detail. You can see a bunch of swing failures on the way down. And over here, you can see a bit of an order block developed. I usually look for solid candles with very little wick to the upside and down, and use that candle body as my order block. I posted this previously with this, it's actually a 4-hour order block right here, or you could call it a 12, whatever. But I was mentioning previously on a chart when the price was way up here that market makers for meme coins and any of the new VC scams, they all target the order block stops because they know that order block traders are essentially putting their long inside of the order block, maybe somewhere around the middle of it, and they're trained to put their stop right below that wick that created the order block. So they tend to get targeted on those drives down. It's just basically another obvious liquidity point. So if market maker needed your stops, that's where they would target. So a lot of the time, actually one of my mentors, Kane, he always used to preach, put your entry where your stop would be normally and give it a little bit of space. Usually that's where you're going to get your best entries, especially with these volatile meme coin types. But yeah, anyway, that's a side note. Right here, I see a 12-hour order block, very similar to this one. So it might base in here, but it might also target this order block stops again. We'll have to see. One thing I do see is a regression trend over here. And so you guys know, there's various, this is the free version with TradingView, but I can't remember what the default is, but it's definitely not this one. I prefer using a more natural form of the regression trend, which is open, high, low, close divided by 4. That way it's taking, you know, the top of the wick to the bottom of the wick, the open of the candle, the close, and dividing it by 4 to give you a pretty smooth trend within that regression trend. And then you're always going to have deviations, especially on big dumps targeting liquidity. But this is a pretty clean parallel channel. A lot of people use these rays and then they arbitrarily line them up just by what they visualize, but you can see the difference, right? Just the angle is cutting much lower, and it's basically tricking retail to buy the breakout lower when the real trend is a little bit higher. And the same to the downside. As you can see how it deviates pretty strong there, but I mean, this one's lined up much better with the regression trend. In this zone right here, I see a long, but before I show the long, these are the important levels. So you have an external high up here, you have a major liquidity pool here with these equal highs, Then you have the order block stops that got nuked over there, forming this order block. So those are your key levels, and if we zoom in within the range, we'll go into the 4 hour, and you can see a bit of a harmonic shaping up here with this 4 hour order block. So at the bottom half of that daily order block, this is going to be your 4 hour order block if you're trying to enter intraday. You also have a 4 hour imbalance over here. Actually, the 4 hour imbalance is there, but the 2 hour is a little bit wider. Up to there. That's why I have it on the chart. Now it dipped into it, but it only tapped the top of that imbalance. So that's basically going to create inducement for people to go long early. So what I'm waiting for, just because this harmonic is starting to show signs of weakness, we mark out the B point, which is the midpoint of a 5-point harmonic. And I just mark it in as inversion. So what I'm looking for is a close below it, which we got here. And here it's just trying to find its footing, whether buyers or sellers are in charge. But this wick right here was a pretty strong rejection of that level. So if it does the same thing here, then my bias immediately shifts to D, which is going to be the bottom of your 4 hour and daily order blocks right here, just because this harmonic lines up pretty nicely. You have basically like a 50% corrective retracement here, projection to like the 113, let's say, and then your projection C to D 1618 at the 886. So basically all your ratios line up for this harmonic into the bottom of that order block. The other thing I like locally over here, if you go on the 15-minute time frame, there was a bit of an inducement here, and they rated it, created an order block, and then ran it up. So at the bottom of the order block, you have a 15-minute block right here, which is basically your deepest entry for that potential long. So based on the harmonic and how we're riding the channel down, we're now rejecting the midpoint. So below the green, you can see the green is a reactive midline or heart line at the channel, regression trend, whatever. And because we've rejected it multiple times and we're deep in the harmonic, rejecting the midpoint, my bias shifts to that 886, which lines up nicely with this regression trend. So I'm thinking this will be a good area to long. Below that, I don't really see another target just because we've already rebalanced a good portion of that weekly. So it could go lower and do one more dip, but honestly, if it builds 15-minute structure down here in the bottom of the order block, it would, to me, it would be good enough to risk along. You know, I would punt along down there. On the high time frame, that was your intraday harmonic, but on a high time frame, you could see this Gartley. So it's basically a 618 first wave, right? Not quite, but close. Lower high around the 382 to 886, so it's in that ratio or that range. And then your B to C projection around the 1618 into the 786 for the whole harmonic. So this has a really nice tight ratio as well. This right here was your terminal bar. You had a huge spike in volume right there. It tells me that level got bought up after having outliers sell volume. It immediately got absorbed here. So that's your terminal bar on the harmonic. And now you're just looking for that higher low within the range. So I think that's going to form in that order block we're talking about in this chart right here. The last thing to point out based on targeting, so if we get our entry at the bottom of the order block, I'm targeting these swing failures because, I mean, they're just too clean, right? Easy liquidity arc to target on the way up, very easy. And then on the daily, this is your trend-based fib targets. which is going to be 30 cents to 28. The way we get that, once your trend is established, this is your swing low, swing high, and a very clean swing low if they hold the terminal bar right here. And then you can see that projects to your 1272 and 1414. For meme coins, I just find that this projection on trend-based fibs works really well. So that's pretty much what I'll be targeting on the move up. I'm looking to go very low leverage, 2x. It's basically like a spot long, right? 2, 3x, wider stop, and then go heavy position size on this one, and then just pretty much hold it, because I think this is going to be your reaccumulation before launching pretty heavy on the next move, kind of like MOG when it took off. Anyway, that's Brett. Reply, guys. Come one, come all. I'm waiting for you motherfuckers. Let's go.